long-term holders are accumulating Bitcoin again. How will this affect the price? The basic laws of supply and demand determine the price dynamics of any asset, including Bitcoin. When supply exceeds demand, the price of the asset generally falls, and vice versa. Analyzing a long-term bullish market, one can observe that significant volatility and price growth of BTC are followed by periods of correction and consolidation. Most investors understand that financial markets do not grow continuously, leading to dynamic interactions between supply and demand. This trend is evident when observing Bitcoin's realized capitalization and realized profit. Realized capital summarizes the value of all BTC based on the price at which they were last moved, providing a clearer picture of the actual invested funds. Realized profit refers to the actual profit BTC holders made by selling coins for more than they bought them. When Bitcoin reached a new all-time high of $73,000 in mid-March, its realized capitalization also increased. This indicates that most long-term holders were in profit. As a result, some of them closed their positions, leading to a significant spike in realized profit. The increased supply of BTC on the market exceeded demand levels, leading to a correction phase during which the price of the main cryptocurrency fell below $57,000. This dropped Bitcoin below the realized price of short-term holders, causing market panic. Realized price, the average price at which all BTC were last bought. Realized price of short-term holders, the average price investors paid for BTC that they moved in the last 155 days. These coins are likely to be spent or sold soon. Realized price of long-term holders, the average price investors paid for BTC that they have not moved for more than 155 days. These coins are unlikely to be spent or sold soon. The realized price of short-term holders, which currently stands at $60,500, served as an accumulation point despite investors' fears. Indeed, long-term holders felt confident, buying more BTC at this level after realizing profits in March. The change in the net position of long-term holders provides insight into the actions of this cohort of investors. After a prolonged period of distribution, they have begun accumulating BTC again, adding more than 70,000 coins to the aggregate balance since early May. Change in net position of long-term holders shows how the amount of Bitcoin held by long-term investors is increasing or decreasing. Based on simple laws of supply and demand, as demand for an asset begins to exceed available supply, the likelihood of a renewed upward trend increases. Observing the balance of Bitcoin on exchanges can confirm this dynamic. Balance on exchanges demonstrates the total amount of BTC held in cryptocurrency exchange wallets. Since early May, more than 30,000 BTC have been moved to private wallets for long-term storage, demonstrating holders' confidence in the future price growth of the main cryptocurrency. While predicting the future dynamics of an asset can be challenging, some on-chain metrics indicate potential price points that investors should watch. One such metric is the MVRV extreme deviation price bands. MVRV denotes the ratio of Bitcoin's market value to realized value. Price bands show the upper and lower limits of BTC price based on historical MVRV values, helping to identify periods when the asset was extremely overvalued or undervalued. Recently, Bitcoin has risen above the plus 0.5 price band, which is currently at $64,600. Historically, this has led to testing the 1.0 price band, supported by growing demand. Currently, it coincides with the $77,000 level. The basic laws of supply and demand determine Bitcoin's dynamics. Indeed, the price falls when supply exceeds demand and rises when demand exceeds supply. Metrics based on blockchain data provide valuable insights into these processes, allowing analysts to understand holders' behavior. The recent decline in Bitcoin's price to $57,000 is directly related to the increase in supply. However, long-term investors have shown confidence, accumulating more than 70,000 BTC since early May. This trend indicates market resilience despite short-term fluctuations. FET has reached a market peak, new record unlikely. The price of FET has overcome significant resistance at $2.50, but the expected rally may not start. Investors are waiting for FET to continue its growth, but they may be disappointed. The popular AI token risks coming under selling pressure as it has already reached a market peak. A bullish breakout from consolidation and the break of a key resistance level indicate the possibility of a rally. However, the situation is complicated by the fact that this week FET formed a market peak. A market peak is the maximum price point of an asset before a significant decline. It indicates the peak of bullish activity. This is usually accompanied by corrections as the market cools down and investors start selling. A market peak is formed when the on-chain metric of the share of coins in profit crosses the 95% threshold. This is what happened with FET. Currently, 95.3% of the circulating supply of tokens is profitable. This is fraught with a sell-off. The price in daily active addresses, DAA, divergence indicator also points to a similar scenario. Divergence occurs when the cryptocurrency price and its DAA move in opposite directions. This indicates a potential mismatch between market valuation and network usage. Usually, when the price rises and network participation declines, it is a sell signal. In the case of FET, this condition is met, potentially triggering sales for profit-taking. The price of FET has overcome the $2.50 resistance and reached $2.58, showing almost an 18% increase in 3 days. This allowed the altcoin to break out of a month-long consolidation, but soon FET may return to it. This is due to the aforementioned factors that promise a bearish scenario for the price. Accordingly, FET may lose support at $2.50 and fall to $2.26 or lower. Will there be an ETF for Solana? Recently, activity in the cryptocurrency market has been off the charts. Participants are waiting for one thing: the decision of the U.S. Securities and Exchange Commission, SEC, on spot Ethereum ETFs. Daniel Yen, co-founder of the analytical platform Matrixport, believes that following Ethereum-based exchange-traded funds, ETFs, similar instruments targeting Solana will appear on the market. Ahead of the SEC's decision on spot Ethereum ETFs, many are wondering which cryptocurrency might be next. According to Daniel Yen, Solana is the most promising candidate that can benefit from the expected success of ETH ETFs. The expert draws parallels with Bitcoin ETFs, which appeared on the market in January this year. The event significantly increased the value of Ethereum and interest in the cryptocurrency. Thus, a week after the launch of the instrument, the ETH/BTC pair rose by 12%. Yen believes that a similar situation could happen with Solana. Members of the crypto community also actively speculate that the approval of spot ETH ETFs will inevitably lead to demand for ETFs based on other altcoins. However, some still believe that there will be no hype. At least because there are no future Solana ETFs on the market yet, unlike Bitcoin and Ethereum. The two largest cryptocurrencies by capitalization had such instruments by the time they applied for spot ETFs. It is natural that the crypto industry is excited about the potential listing of Solana ETFs, but all of this is unlikely. There are no futures for Solana. When it comes to cryptocurrencies ahead of Solana, these are BCH, LTC, and Dogecoin because they are already trading on the Coinbase derivatives platform, which is regulated by the CFTC, noted Ithaca founder Demetrius Kavatvaz in a comment for Be in Crypto. Although there are no spot Solana ETFs in the US yet, there are alternatives on the market. For example, the Grayscale Solana Trust, GSOL, the Solana ETN from Van Eck, and the Solana ETP from 21 Shares. They all provide access to SOL's prices through derivatives. Such products offer investors indirect ways to trade SOL, reflecting the token's price movements. Demand for Solana remains high. According to CoinGecko, last week the price of SOL jumped by 24.6%, signaling growing investor confidence in the cryptocurrency's potential.